This conference will now be recorded.
Good morning, ladies and gentlemen. This is Clueless Day Trading Frank. It's approximately 10 a.m. on a cloudy, warm Saturday morning. It's March 13th, 2 days before tax day, 2019. I'm sorry, April 13th, 2019, um, 2 days before April 15th, tax day. This is a quick, hopefully keep it within 35 minutes, brief training webinar. But given the fact that we don't have any, some of the newer members showing up yet, this is going to be more of a stock talk kind of thing with two great and loyal traders and members, MB and Mike H. So on that note, full disclosure, this is purely for financial education, not for any solicitation or advice, and we shall begin. This session will be uploaded to the Google YouTube channel for a viewing by everyone else, and I'm sure you guys are going to find it helpful to some of the topics that will be discussed here and questions answered primarily for the attendees. On that note, let us begin. Keep in mind, very important, the Sunday webinar, which we do, very, very important, the strategic webinar on Sunday evening after foreign markets start, futures start trading after 6. It starts generally around 8 to 8:30 p.m. around that time, is still on, and highly suggested that all of you attend it because that's what prepares us what's coming next week and the week after, but primarily, gets us prepared for Monday morning. So that is still on. Just a quick reminder. So on that note, uh, Mary, let's field off some questions. So one of the things that before you do, one of the things that MB likes to point out during the day, and she's a pretty, very astute trader, is to look at certain things that she's doing. Remember, traders have to do their own stuff. Use the Clueless Day trading not as the end in all, but simply as a very effective tool to supplement what you guys are doing. So, in many, many cases, and as MB will attest, she will be trading her own stocks that shows up on her scans and asking me to maybe sometimes take a look at them. Some of them are things that I'm already suggesting and trading. Some of them I'm looking at saying, hey, I like it, let's go for it. In the meantime, she's doing what she's doing. So one of the ones that she pointed out to me when we had early session, um, and these are very important for for real traders, was the fact that the banks were weakening. So I went, as posted that in chat room. I said, well, not really, because I don't see J.P. Morgan and Goldman Sachs, two, and Bank of America, three of the ones that I watch very carefully as my barometer for the financials. I didn't see them weakening at all. But she was right. What was weakening was Wells Fargo. Now I don't track Wells Fargo. We were very happy with JP Morgan. That was a 200% more, 300% type of earnings winner. But not only earnings winner, we had bought it on Wednesday. And so that was working out fantastic. So, but she was right because Wells Fargo during the conference call started to come down. Um, it was up pre-market a bit. So that's what's pushing other banks down in the regional KB index, KBW index, I believe, and that was pushing this baby, which is, I quickly pulled up the XLF. This was red, and it had a shooting star, or a what we call a this type of thing, or what we call an inverted hammer, which looks like that. Okay, so when she mentioned that on the chat room, it was actually looking like this. So obviously, you have to keep an eye on it, because if this turned out to be a inverted hammer, remember, hammer looks like this, very positive, that type of stuff, this type of stuff, right? Hammer reversal, we play it all the time. We mix it in with the internals, and then we find, the probability of whether or not that's a real move, or, you got to mix it with the internals. If it's coming off the low stows and all that stuff, this was a perfect move, for example, and this was overall market all the way back from the Christmas Eve bottom. You can see how well they correlate. I use this all the time. You got this is a daily chart, so it's not showing you what's happening intraday. But next day, if you looked at it, it was a solid hammer reversal, powerful crossover on the full stochastics. Very simple stuff. Anyone can use it. And a crossover developing. The crossover, this one, by the way, did not develop till 3 days into the reversal. Okay, these were huge days, huge days. This was 26. Yep, 26, 27, powerful days. So we started to see the bottoming process. I don't always wait for the crossover. What I'm also looking for is the actual turn. You can visually see it. You can visually see it and act on it. So anyway, so if you get an inverted hammer, which this was looking like at the first part, right after the market opened, within the first hour, the market started to pull back. Banks are a big component of the S&P 500. That'll affect the Dow Jones Industrial Average. So this was right, but end of the day, so I looked at it. My determination was, given the strength of, and I was looking at other charts too, on the banks. My determination was, and I was right overall, but at the end of the day, that this was not going to be a severe inverted hammer like that we would end up with either a doji, which is indecision like that, okay, plus where the body of the candle is in the middle, or we would find a green doji, and that's exactly what happened. I expected a doji, which is good, on heavy volume. You got to look at the volume. Look at this. The little tricks of the trade. Very simple. Volume expansion. See that? Volume expansion right there. Green volume. This was actually turning red when this was an inverted hammer, when MB pointed it out to me because of Wells Fargo pulling back. But I didn't see the other majors like the Goldman Sachs and the JP Morgans and the Bank of America is doing that. So I felt confident, and then I mixed it with the charts. There's a lot of components that go in when you are processing information and being a tactical trader. And as you do it more, which all of you will agree with me, as you do it more, it becomes kind of second nature. And it's not easy. Nothing's easy. But when volatility hits every 15, 20 minutes, it's very frustrating. But you start processing information. What's the internals doing? It's just like driving. Like once you first start driving, it's always like you gotta watch out. Like when I'm gonna press the brake, when I'm hitting the accelerator, the gas. It's not a manual anymore. I know how to drive manual cars, but most people don't. So when you gonna slow down? When are you gonna take that corner? You're gonna take that corner at 30 miles an hour. You're gonna take it at 50 miles an hour. What's ahead of you? Is the car in front of you? It becomes second nature after you become a drive for a couple of months. Same thing with trading, that with the other guy in the front is going to suddenly swipe right, so you slow down. So all that stuff. So trading is the same way. So always have to be alert. And so end of the day, so this was looking good. This was looking good. The MACD, you start to see the histogram expansions, volume moving up. So I kind of made a determination. No, this is going to be fine. So I mentioned that to MB in the chat room. So this is where we are right now. On top of that, what in very simplistic terms is I drew the patterns, because remember, I don't really track XLF, right? So I drew, even though it's an important component of the market, banks just started waking up. And that's a really good sign. That's a really good sign. JP Morgan on Friday, just so you know, had a phenomenal move. Now, we charted JP Morgan, I'll show you, earlier part of the week. And I said, go ahead, let's buy the 106 calls. We paid initially like $1.10, $1.15. They went to about $1.80 the following day. This was Thursday. They went to about $1.80, $1.85, got out at around $1.80, re-entered back around $1.20, and those things went to almost $4 on Friday morning on earnings. Okay, so the thing was that then of course XLF is now on the radar of a lot of technical traders because of what happened with JP Morgan and other banks that are coming. Goldman Sachs, we have a earnings trade on Monday morning before the market opened. Hey, we shall see. I'll explain the Goldman Sachs and all those charts. I don't want to spend like an hour here. That's on Sunday night. We'll look at that. That's going to be a big component of the market. If Goldman's down $7, it's happened. Then the Dow's going to pull back 100, 150 points. What I was saying about JP Morgan was what has happened in previous quarters is JP Morgan's perked up during earnings, and as the conference call goes on, the stock gives it all back. It didn't do it this time. That's a really good sign. Remember, sitting on a conference call, listening to the CEOs talk about things and this and that really means hill or beans. I mean, they could be talking up a big talk about the business and everything, and the stock could be sliding out. So it's really the stock price reaction is what you need to watch. And it was bullish. Got to face it. And that's why the markets stayed up and closed at the high of the day. And we had a very, very powerful end of the week, as I had projected a while ago. So this is a plus. Now, hopefully, Goldman Sachs, GS, doesn't completely, and we look at the Goldman chart on Sunday evening, and I do see, and I've shown that. I've put that chart on the Twitter feed too, with some comments. Goldman is approaching the 200-day moving average. Goes above that, boy, that is extremely positive. It hasn't been a 200 moving average for months and months. So financials lift. It's going to take the whole market higher. We're going to retest the highs. So saying all that, this is the way it works. Now, what the other thing that I do is I immediately, again, second nature, very quick at this, and any of you can do it, I draw patterns on it. So what is the pattern that I drew? We have, and remember, it's following, it's kind of following the market. So here we are. We have, there we go. We have a very powerful support at 25. Remember, we don't trade the XLF. You can buy the options on the XLF if you want to play the Spiders ETF on financials. But this is a great harbinger or a signal as to what is going on. So what do we see here? We see multiple shoulders. Head, left shoulder, right shoulder, and now we are now, this is the big neckline. Remember, 27.5 is the big neckline. You can see that very, very clear. If we break out over that, the market's going to make an all-time new high. Okay, and this shoulder, this was a big drop back on October 8th and November and in September of last year. Remember, right there, this was the 1,100, 1,200 point type of drops on the Dow Jones Industrial Average, which preceded the other big drop that happened in December after the market started to come back up. So saying all that, the market is now attempting to attack the neckline again, the financial ETF. So is the market. So the market's actually moved up. Overall market's moved up a little bit more, but this one's attacking because overall market, if you guys know, should know because it's my Twitter feed every single day, we have broken above multiple necklines. So that's pretty big. So the financials giving a boost. Goldman Sachs, Citigroup, those are the two that we're playing for earnings on Monday morning, are going to really determine the short-term path as to what's going to happen. So in all that on the Sunday webinar, so please do attend. So I draw the structure on it, and I start to see many different patterns. So one of them that I see here is an ascending triangle. Remember, textbook stuff is one thing, and in reality, it doesn't always match like perfectly, right? That's just like life. So you have to look at the broader picture and see whether or not it is fitting those patterns, not exactly fitting, but overall, whether if it fits 60 to 70% of the pattern symmetry or the pattern shape, then it's fine, because these inverse head and shoulders don't always look this perfect with left shoulders and right shoulders, showing exactly. A lot of the times, as I've shown you, they're like this. Remember, I'm sure MB will remember, and many of you will remember, that I talked about 3 weeks ago, and we're going to review that on the Sunday webinar too. I talked about a complex W. You remember that? The complex W? Well, everyone was freaking out with it. Exactly. See, these are classic trading calls, which can make people a lot of money. And I know some of my traders are making a lot of money. Okay, these are complex trading calls that you're never going to hear outside. You're probably never going to hear from your other services that you subscribe to or follow. And they're great people. but they don't seem to look outside the box. And that's really what we do here at Real Estate Trading. In the most difficult time, I'm trying to analyze the broader picture, which still looks fine, right? The monthly charts and the weekly charts, still the green candle, and the shorter ones which get messed up because of all the noise that happens during the day. So I'm thinking outside the box. I'm mixing it up, then I'm going with my projection that we are going to still try to one way or the other pull up, unless some major things go wrong, such as a no China deal. That would pull the market back 10%. We'll drop like 2,000 points, easy. I think 2,000 points. So, but that's not going to happen, in my opinion, based on my game theory analysis and my knowledge about political and economic correlations. I don't think that's going to happen. So bottom line is the complex head and shoulder looked like this. So the average technical person will look at it and say, "Oh my God, we're in a downtrend." If you just look at the pattern, yeah, of course we're in a downtrend channel. Well, when's the biggest money made? The biggest money is not made when this breaks out and then goes up a little bit and then pulls back. The biggest money is made when you are positioned at these type of levels, when you're testing the 3450 and things like that. And that's what I show all the time. Now, those are the difficult times to really take a position, because that's when everything's blood red on the screen and you're having a crappy feeling. You're like, oh my God, I'm positioned here. Look what happened. Look at that volatility. Look at that. So this complex head and shoulder, that should look like this. There. To me, it looked like a W. Now I mix it in with a lot of the internals, obviously. You cannot just look at an external and make a determination. You also have to look at the internals, whether they are overbought, oversold. So if they're really overbought, this thing is still going to be in a downtrend. They ain't going to be breakout, and this W will not shape up to be a real W, which is a dragon bullish pattern. So I did that, and guess what? Worked out perfectly. Worked out perfectly. So what I'm getting at, they don't always look like this, ladies and gentlemen. That would be beautiful. That would make my job a lot easier, my trading a lot easier. I'd be making 10 times more money, okay, than I do. You guys would be just like, wow, look at this, man. This is perfect. No, there's no perfection. So a lot of the times they look like this. That's what I'm getting at. So don't get, a lot of the times they look like this. And that's it. That's what I want to say. You might have a lower low, and then they just break out. And that's exactly what happened over the past week. So I put out the pattern. I'm looking at an ascending triangle right there. You can see that. I am looking at the fact that these were the big sell points, the big supply zones, that it broke out over that. It did. And then it basically closed. Let me see. Did it close slightly below that or over that? 1 second. What's going on here? Okay. So I'm going to. Now, personally, there. So this was one line, right? This was the big, big sell zone. So you always have to watch the supply demand points. Where did the machines come in and really hammered the market? So it closed above that. This is another point back in December where the market just, and this is more important, where the market just completely collapsed on December 4th. Did we close above that? The answer is I try to be as much of a perfectionist as possible. So I'm going to attach this. I'm sure you guys can see it. The larger the screen, the better. In fact, sometimes smaller iPhone screens, you can see these things very clearly too. There we go. So that was, what was the number? That number was 27, and we closed above that. So that with a green doji, technically very positive. I would like to have seen it like this, like a long tail move, but the doji is good enough. Remember, the longer the tail and the body of the candle, and that's why, review candlestick patterns. Fantastic videos on my Google YouTube channel on new member intro videos. New members listening should definitely study that. One of them's not mine. It was something I found on YouTube. And there are tons of great videos, training videos on candlestick dynamics, candlestick patterns, candlestick trading. Forex traders use candlesticks all the time. That's foreign exchange traders. Commodity traders use candlesticks all the time. I live and breathe these candles because they make or break you as a trader. So anyway, so that's where we are. So overall positive. Now, does it mean the world's just all green, like blue skies, like they say on CNBC? There's no blue skies. You want to buy on the most rainy day and sell when the sun's peeking out. And when the sun gets really hot, you want to dump everything. It's just the way it goes. All right. So basically, this is your big resistance. That's 2750. Now somebody say, well, why is he talking about this? Under 2714, 2750, it's a couple of cents. I'm not talking about trading this. I'm showing this as a proxy for the broader banking financial industry. So once it gets to these levels, it's going to hit some formidable resistance. So all I'm saying is that we have still a little bit of room to move. So when I draw these lines, this is a rising wedge. Upper end of that move is 2763. And if everything busts loose and big banks, one after another, come up with positive guidance off lowered expectations, the expectations are very low by Wall Street of what they're going to make. That's why JP Morgan went up so much. Then we are going to get to that level here. So anyway, just want to give you a quick snapshot of that. But Mary just mentioned it's on the weekly. It's also a large inverse head and shoulder. Yes, thank you for bringing that out. And one thing I do want to point out to all new members, including Serge, thank you for attending. Nikki, thank you for coming in. I know you're working today. And Serge from the Great White North. So is that, and I will, and MB, I want you to chime in. When you started on my service, then you came back, and this was 2 years ago, whatever. Tell me, were you technically, did you find it beneficial to understand a lot of this technical stuff that I talk about, and have you become a more effective trader using these tools? Just asking, because I remember the conversation we had.
Yeah, oh, definitely. Because, my background was, I was an EA for a finance firm, and they just strictly buy mutual funds, and they didn't believe in technical analysis. They just fundamentals. So it always intrigued me. So, being there for years and not being involved in it, sure, absolutely, a great refresher and piqued my interest even more,
Right, and keep in mind, and thank you for, contributing that, because it's going to help a lot of new members, like, start thinking why they should learn this more in depth. And of course, you want to learn it more detailed, you got to sign up for the advanced coaching sessions. Is the fact that at Clueless A Trading, we are doing technicals, but we're not just blind to everything else. There's a lot of great technical services who are so technical, I don't even understand their charts. But they are not mixing in the macro picture on the background, what's going on. They are not analyzing the important developments politically and economically that's happening that'll affect these technicals. So here at Clueless A Trading, as I've said many times, we incorporate all that. And most importantly, one of the biggest components of the market, which you seldom hear being talked about, is behavioral finance. Are people, what's the sentiment out there? And the sentiment is very damp, and the sentiment is very low, not just from mom and pop, which basically means that the average investor, but also on Wall Street, also from the big analysts. You don't see anybody any bullish, and I'm not crazy bullish either. But at the same time, if you look at the overall sentiment, it is extremely low, and you feel that between traders, investors. So you got to incorporate that in a big way, and that behavioral finance part is important. It doesn't mean we can't drop 600 points just because there have been times that the markets on a technical basis, and we're going to show this on Sunday night, where we are getting excessively technically overbought. We're close to it. And I've said it before, and I'm going to show it very clearly. There's 2 points that I wrote down, one on the SPX weekly and the measured move on the XPX median. And I wrote down, I normally don't write down these little cheat sheets. It says webinar notes. I'm going to talk about that on Sunday, which shows how excessively overbought we are getting. But when you look at this, when you look at the weekly chart here, as she pointed out, we also have a very large defined a head and shoulder with a big neckline here. We are within that zone of that neckline right now, right there. And the full pattern completion comes in at around 29. That's picture perfect textbook. Is it going to happen exactly like that? Maybe, maybe not. Because when you look at right, no, I know why.
Because I'm in the calls for June. It better.
Correct. Now, why I'm saying why I think that your of course is going to be has a high probability of confidence, because when we trade with a high probability of confidence, whether that stock's going to go up, whether we're buying calls, whether we're buying puts on the SPYs, things like that. We are building in a mathematical confidence model, correct, MB? So based on what she is saying, that of course it will, I believe yes it will. Now, before it does, you have to be aware of the fact that once we get here, we could very well do one of these, which I doubt, but that's a big move. That's 3 weeks of downturn. But the thing is, one way or the other, by the second quarter, that's why she is in the June calls, okay? By the end of the second quarter, which is June 30th, it most probably will hit with a high level of confidence that 29 level. What does that mean? That means that a lot of banks and the market will make a significant high. But based on technical pattern, this is the story. We're getting up here. We are, and I don't want to spend too long with this. We are crossing over some very important lines. This is the 50-day moving average, the red line here. We have the 5-week moving average about to cross over. Look here, cross over the 34. That's a beauty. We haven't done that in years. So Mary, MB might have something going there. See that? That is serious, okay? And once it crosses over the 50, when this yellow line, which is the 5-week moving average, right? Just like the 5-day moving average, this is the weekly, starts to cross over, and do that with any of your charts. Use 20-day moving averages. I use 5 because there are 5 trading days in a week. So I like using 5. Keep your eye on the short term, keep your eye on the long term, and trade short term, meaning protect your profits. That's my theory. So and of course, the swing setups, I have the patience to hold on. As long as the overall chart doesn't change, you keep on adding to it or buying time. So this is important. Now, where is so that's it. So these are very important things that are starting to happen. This is very, very important. And one thing I detected, which I'm not going to reveal now, which was big on the SPX, and I was looking at the weekly before I shut down all my computers last night. Yesterday after market, I noticed it. I'm like, wow, I got to share this with my members. So anyway, so that's kind of a broader picture on the thing. Now, I'd love to field any questions. Serge, I'd certainly like to answer a question or two from you if you'd like. Serge, can you hear us? Okay. We're going to talk about the broader market and all that stuff on Sunday night, because there's a whole lot of stuff happening here, which is very exciting, And but let's talk about a stock, okay? So let's talk about runaway breakouts, Avago, all right? So here's Avago, which we don't trade as much as we don't trade, because sometimes it just moves up $3 or $4 or $2 or $3 during the day, and the options do nothing. Because one of the things, and this is very important, well, Serge, you can type in. If your microphone doesn't work, just type in a stock you'd like me to look at, or just listen to some of the things we're talking about. So feel free to type into the message box. I can see it. I can respond to your question. So the thing is that one of the things about options trading is that you want to look, we're all working with limited amounts of capital, right? So, and part of that discipline rule is that you always need to have some cash on the side. So so to dollar cost average, to take advantage of positions happening and things like that. So what happens sometimes is that you're looking at a stock which is moving nicely, but the options are doing nothing. So you have to make a determination, and these are things that you learn as you do more and more. I should say more and more. Like you say, okay, I'm going to allocate that money towards something which has a high correlation beta coefficient with the stock. In other words, it's moving with the stock faster, so I can make money faster, and then I can go back and do other things. So sometimes options volatility is suppressed, and the delta gammas and the thetas, right? The IV, the implied volatility of those options, are on certain days suppressed, and you're wondering why the stock is up $3, but your options are only up maybe 30%. And then you're looking at some other stock, the way it works like in life, right? That we're not in, that's up a gazillion percent on the options, yet the stock is only up $3 or $4. So that's just something, just a side topic, very important topic. So reallocation of funds, depending on options elasticity or movement with the price of the stock, is very, very important. There is no, I can teach you that stuff on the advanced coaching sessions, but during a trading day, you will be the one who will have to make the determination, or you can ask a question on that particular matter as to whether or not it's feasible to stay in that option given the stock is moving higher and the options are not doing much. Certainly feel free to come into the chat room and ask that question or DM me directly. Chat room is far more effective because it's on one of my screens, so I answer right away, or DM me directly on the Twitter feed. So let's look at a runaway gap here. This is as picture perfect a technical chart that you can really get. This is like Harvard Business School study if they teach technical analysis. I don't think they do. Okay. Business schools surprisingly don't teach. Actually, some business schools do. NYU started. Babson College, where I did the executive MBA in Boston. They have stock market training and stuff like that. They have a whole trading floor replicated. They have one here at NJIT, New Jersey Institute of Technology, Baruch College in New York City, great school. Lots of Wall Street guys came from there. They have a whole simulated trading floor, all cool stuff. But technical analysis, I don't know if they teach that. So if you look at this here, and this is a daily chart. So, what I was saying about Avago, on certain days, Avago pretty much did nothing, even if the stock was up 3 and 6. So I kind of like, okay, we'll wait for a significant technical move breakout. Even though we have played Avago on earnings, we have done well. We have played it certain times when it's moved, but you can make a very decent sum of money, as I showed just on Friday alone, on Avago by buying these breakaway moves. And if you look at, just take a quick glance at this chart, you can see the breakaway right in front of you. And this was partly, well, majority due with the fact, as I clearly alerted, with President Trump going gangbusters, positive on 5G technology. So Avago was just placing, it was getting ready, and then burst. Now, would that burst take us? If it's picture perfect technicals and we don't get any real major fallouts along the way, then within a week or so, the stock will hit 330 around this level. And you can imagine, we got in here. We got in here on Friday at around the 311 level. It closed at 317. That's sweet, just for one day. The options were up a lot. What were they up? They were like up, I think, like 100% plus. And because we bought the 320 calls and the 315 calls, if you bought in the money calls, then you'd probably be up the same. So this is a picture perfect, and this is the one that I'm going to end this quick training session off. So let's look at the broader picture of what's going on. Okay, what date is this? This is May of 2018. Long time ago. May of 2018, April of 2018, 1 year ago. This is actually a true 1 year chart. Okay, stock right there. All right. So the stock trades in between all kinds of stuff going on. Semiconductors going to hell in the handbasket. Apple iPhone's not selling. Broadcom is a major provider of chips to Apple. This is Broadcom that they named it Avago. I don't know who comes up with these fancy names, you know. But it's in all different fields. Their hands are in a lot of computing chips, and 5G is a big thing for cell phones, right? There you go. So 5G technology, you're going to get almost 10, they said 1 gigabit or 10 gigabits of mobile speed. You know, you can download a whole movie in 5 seconds. Not that I watch movies on phones. But imagine what it do for your trading too, because it'll be faster, there'll be no lag. You can watch my videos. How exciting is that, right? Yeah, right. If when you're bored out of your mind, that's when you do it and you learn something. Download it and watch it in like 3 seconds. I mean, it's huge. The IoT, the Internet of Things are going to be connected. It's like a whole different world. I mean, seriously, 5G technology. They've done it in 48 cities in South Korea. They are the pioneers of, you know, really like out there. So President Trump's like, you know what? We gotta win this. I love that type of talk from him. Okay, so we gotta win this race. This is a space race, the 5G race. All right. So let's look at it technically. What's going on? So this is 270. Let's call it 280. This is 200. That's 80 points. All right. So it's broken out of a 1 year range with an 80-point depth or range. Simple stuff. This is the old-fashioned way of doing things. Back of a napkin. And you're going to love this, all right? This is, and it's going to happen. I'm telling you right now. It's going to twist its way up there. 80, the depth is 80 points. 200, 280. 1 year, it's been going back and forth, 80 points. Then you start to see the bull flag. Stock crosses over the psychological 300 on earnings. This was the earnings move we played. Now you draw some patterns. So it's 80 points. 280, add 80 to that. That's a rule. It's kind of a rule of the thumb. To 280, where does it come to? What's 280 plus 80? Somebody tell me. Come on, somebody chime in.
360.
Thank you. What's the magic? Serge, I'm going to answer your question in a second. 360. 360? Did I make this up? I drew this chart a while ago. 360. Okay? Here's your 80 points. Depth. Right? Add 80. 360. Amazing, huh? Yes, believe me, it works. This is really a long-term, short-term swing type of play. Now, Serge asked the question, how do you trace the pink upper line? Okay, one of the things about technical analysis is that as you get better and better at it, and I'm pretty good at it, and I'm really finessing my way of looking at things. I draw certain things which are known as megaphone patterns. Okay, so and it's an excellent question, Serge. Thank you. Serge's question was, how do you trace the pink upper line? So the way I traced it, and this wasn't drawn yesterday, okay, I've shown this chart before, is I drew a megaphone. A megaphone is for extreme upper and lower zones based on a significant range breakout or so on a particular stock or market. You've shown MB, you know that, Nikki knows that, Mike knows that. I draw megaphones time to time, and I don't do it too often because megaphones are, you can certainly look at the whole definition and the methodology of the megaphone pattern. I do it visually based on my experience. And it's not like a perfect science, but it gives you the extremes of where a stock can get to. on the up end or the low end. Now, a megaphone is an expanding pattern, meaning if you look at it, this stock is expanding within a large megaphone. It's an expansion move. When it crashes, if things go to hell in a handbasket, 5G becomes 0G, okay, we're going to hit 230 again, which is also the lower end of the cap. So how do I draw it? I looked at a significant low right there. You can see that 197 back in July of 2000 and what was it, 18, right? I looked at some levels where, I mean, I can expand this megaphone quite a bit. In fact, this megaphone, at that time, I looked at this breakdown level here. This megaphone line is much more easy to use because 1, 2, 3, close to 4. So the lower arm is mathematically not perfect, but mathematically feasible. The upper arm can be twisted a little bit, and let's see, so if one wants to say, I had it drawn a while ago, so I didn't want to mess around with it, but now that Serge brought it up, I can, if you want to be mathematically, not mathematically, but megaphone wise, more correct. Oh, I know why I had done the arm at this length, this pink line. This is the answer to your question, because I had drawn this uptrend line from here, right? It's just a straight parallel line. Remember, you can make lines wavy, so you got to stick with that. So I drew the megaphone based on the parallel symmetry of this uptrend line there. And this uptrend line basically is, to me, good enough. One can go like this a little bit if they want to. 1 second. So I'm tweaking this, okay? Watch. Okay. That brings it to $400. Is this a $400 stock? Yeah, I think so. So this megaphone is more accurate given the breakout on this significant breakout, the range breakout that I showed on Broadcom, Avago. Here are the points of it. Here's your starting point. So there's your lower arm, upper arm, okay? And the megaphone at that point reaches out towards 400. Now, I don't want, that's 30% higher almost, right, for the stock. So I'm not even going there. Now, this line, I just readjusted. Here's your point. Let me take these lines out. Hold on. Clean this out a little bit. Downtrend lines and stuff. That's a downtrend line coming off a weekly chart. So take this out. That was your neck. That was a terrific, large head and shoulder neckline. That was your neckline. So let me take the neckline out for now. I'll leave it in there. So can everyone see this? So there. So with this point of contact, like I said, it's a straight line. And what did we do on Friday? We actually broke above that. So if I take this out, let me show you something. This is all part of some of the things that I teach on the advanced coaching sessions. Like I always encourage people, spend a couple of bucks, not necessarily for my time, for the cost of running those sessions, and learn these things. And it's going to make you a lot more money or help you lose a lot less money. So here, this is a major macro line. There. And guess what Avago is doing as we speak? It is breaking above this macro uptrend channel, which it has been traveling in. Remember, the keyword is uptrend. It's been within this channel for years. And now it is attempting to break out, and you can see that right there. So if it breaks out of it, what happens to stocks which make new highs? Technically, what happens? It goes higher. Go look, study the IBD, Investors Business Daily, CAN SLIM system, because what happens is new set of buyers come in who don't have the baggage of holding the stock before and losing money. New buyers come in, push the stock higher, and then technically it gets overbought. But this is extremely bullish pattern, what is going on. And I'll explain this also on Friday, on Sunday evening, because this is significant. So that's the answer to your question, Serge. All right? Where that pink magenta line comes in is basically a megaphone pattern. Somebody said, well, is there an exact way to draw a megaphone? Yes, it is, but you need to be a little bit more proficient in technical analysis. You don't want to be drawing megaphones all over the place, because that's not really, it won't really serve you from a tactical, short-term trading profit perspective, because these are the bigger pictures of what goes on. Okay, so I'm going to, everyone's got stuff to do. My dogs are going to eat me alive if I don't take them out for their morning walk. And so God bless you all. See you guys Sunday evening. This will be uploaded right now. And again, two things I always want from you guys. Not much. It's free. One is follow us on Instagram, so you see the options charts. Terrific stuff. It's for promotional purposes. Get all your friends to follow. We'd like to get that follower count above 500, so the algos pick it up and get to 1,000, then we really start moving. So please help us do that here at Clue to Say Trading. Second, people who, we are always looking for referrals. Our business runs on referrals. We don't advertise out there aside from promotional marketing at Instagram. So referrals are always great people. Thirdly, anybody who's having any problems with this market, okay, any market, but this market, which is starting to, which basically making new highs, okay, please direct contact me, DM me. I'll try to give you some alternatives, what you need to do. And in the meantime, just keep going. Have a great day. God bless you all.
Have a good one.